I rise to speak on the Treasury Laws Amendment making multinationals pay their fair share, Integrity and Transparency Bill 2023. While Australians enduring what's being described as a worst cost of living crisis for a significant time, multinational corporations continue to get away with industrial-scale tax avoidance. The Making Multinationals Pay Their Fair Share Integrity and Transparency Bill makes a promising start on targeting large corporations by limiting the amount of debt deductions multinational entities can claim in an income year. The bill ensures that debt deductions are linked to an entity's economic activity and taxable income in Australia, which I commend. I'm encouraged by the commitment this bill makes to integrity, especially given that it is in line with international approaches to enhance corporate tax transparency. However, while I support any measure that increases transparency and integrity, this bill only scratches the surface when it comes to stitching up the myriad of loopholes that currently exist in our tax system. The Australian Tax Office Transparency Report released in November last year revealed that 32% of large and medium corporate entities, including mining, energy and water companies, paid no tax at all in 2020-2021. So just reminding everybody, that is 1/3 of large to medium corporations. Chevron paid just $30 income tax, despite having a total income of some $9.1 billion. Loopholes in our tax system are allowing multinationals to extract billions of dollars from the Australian public. With the recent revelations concerning PwC and other major accounting firms, it's clear that our tax system has been exploited by multinationals for many years at the expense of hard-working, tax-paying Australians. An industry breakdown, in fact, shows so that the Australian Tax Office released its annual tax transparency report. And in that, it revealed, for example, that the amount of tax paid by some 2,468 large to medium corporation entities, and so showed that there is no tax paid by nearly that 1/3. And in that report, that it includes more than half of the mining, energy and water companies included in the report paid no income tax in 2020-21. Now, I just stop for a moment, because we know those companies are making record profits from the Australian resources. That includes companies like Adani Mining Proprietary Limited, 1AGL entity, Alcoa Australian Holdings, Ampol, Anglo-American Australian, ExxonMobil Australia, 2 Glencore entities, a Peabody Australia holding company, Santos, 2 Shell energy entities, Whitehaven Coal, Woodside Petroleum and Yancoal Australia. Now, remembering that just as at the moment we have a debate, for example, as to why the Australian taxpayer is funding $1.5 billion towards a key infrastructure cost for yet another gas development, these large multinationals turn around, take the handout of public money to pay for infrastructure, but then do not contribute back into the system. Every year, the Australian public is denied billions of dollars in tax revenue because of multinational tax avoidance. Now, why does this matter to everyone? Well, that is money that could be spent on schools, hospitals, affordable housing, and in particular, climate change mitigation and transition, which so many of these fossil fuel companies are in fact accelerating and making worse. Now, whilst I commend the government for the bill doesn't address major tax avoidance schemes. It does not address situations like that which occurred in 2017, when the Australian entity of multinational oil and gas giant Chevron was caught engaging in a transfer pricing scheme. Chevron's Australian entity borrowed at an interest rate of 9% from an entity it created in the US state of Delaware called Chevron Funding Corporation. That corporation was borrowing at just 1.2%, while lending at 9% to the Australian entity. This artificially inflated Chevron's expenses in Australia, thereby transferring profits to the tax haven state of Delaware. The Australian Tax Office won a landmark case against Chevron, claiming that the scheme had denied the Australian public roughly some $340 million in tax revenue. Using unusually high interest expenses paid to overseas subsidiaries isn't the only way multinationals seek to game the Australian tax system. In July last year, Rio Tinto settled a dispute with the Australian Tax Office for some $991 million for its use of offshore marketing hubs and overstated borrowing costs to transfer profits offshore to avoid paying taxes in Australia. Now, I do find it's rather ironic when I hear so many in this place go to bat for these fossil fuel companies, these big multinationals, when they are failing to contribute back to the very substance of the community they're so happy to take from. Multinational oil and gas companies essentially pay so little tax but receive so much funding and subsidies from the public purse. Last year, a report from the Australian Institute found that multinational oil and gas giants Chevron and ExxonMobil paid zero income tax for over a 7-year period, despite a combined total income of some $100 billion. Now, I just find that obscene. And when I think of the consequences that we as a society are going to have to pay, and the transition, the adaptation, the preparation we are going to have to pay, to know that not only have we been pillaged, but on top of that, the Australian people are going to be left to foot the bill. Thinking of that total income of $100 billion with zero tax, when individual nurses are paying more tax than some of the nation's largest oil and gas companies, it's blatantly clear that our tax system has a problem and is broken. There are a number of ways in which multinationals avoid paying taxes in Australia, and it's only when we step back and look at the strength of the other tax systems around the world that we realise how badly Australians are being fleeced. And I think this is really important because we have incredible challenges ahead of us. We have big transition costs. We have a cost of living crisis. We have everyday Australians struggling. We have people in this place quibbling over small increases to support to the most vulnerable in our community. We actually are not providing sufficient support. We are keeping people below the poverty rate. And yet we have these loopholes remaining. And it has to beg the question, is it because of our lobbying practices? Because these multinationals have voices and access to government in a way that so many others do not? And we know that that has allowed this system to continue for way too long. The comparisons with high-integrity tax systems is important. For example, Norway. It has a highly effective tax regime. It has been taxing the export profits of its oil and gas sector at 78% since the 1990s. Through this tax, Norway has built its sovereign wealth fund, which is now worth around $2 trillion, or around $1.5 million for every Norwegian family of 4. Now just stop and think about that for a moment. What have both major parties been doing for the last 20 years around so much wealth in Australia? We have just dug it up and shipped it out, and we have not made sure that the Australian people and generations in the future have the kind of wealth fund that should be there for them. Norway, while it has been taxing its oil and gas export profits at 78% for the past 3 decades, that's 30 years, tax revenue from Australia's oil and gas sector has been in consistent decline. In 1997, corporate tax paid on oil and gas exports profits in Australia was 16% of total revenue, but now, in 2020, it had dropped to just 1%. Over the 9-year period from 2012 to 2020, the Australian oil and gas sector reported expenses to the Australian Tax Office equalling a staggering 90% of total revenue, compared to an expense to revenue ratio in Norway of just 21%. In Norway, they claim expenses of 21%. In Australia, they are claiming 90% to limit any kind of tax liability. I mean, if those numbers don't just absolutely call time and have the Australian people and the government and the Prime Minister go, hang on a minute, we are not doing the right thing by the Australian people, it just beggars belief. The high oil and gas expense ratio in Australia either represents a woefully inefficient industry or an extremely effective campaign of financial engineering to exploit loopholes in our tax system, and I would argue incredibly effective lobbying to both sides of this place. Australia needs to put in some serious reform. The petroleum resource rent tax is a classic example, and here we are on the threshold of yet another opportunity where the Australian government is going to need to stare down. Prime Minister Albanese is going to have to stare down the question, do I do the right thing by the Australian people, or do I continue paying lip service and doing what the gas industry wants? Further to broad multinational tax reform, we desperately need to fix the broken PRRT. After it was first introduced in the early 1990s, the PRRT made up 19% of total oil and gas revenue. Thanks to decades of lobbying, it has now whittled away to just 1% of total oil and gas sector revenue. Australians are being fleeced on the sale of natural resources that ultimately belong to them and should be wealth building for generations of future. I'm here, I look at children in the gallery. They put their trust and faith in this place to be ensuring that we have laws that will take care of their future. And we are failing. We are failing dismally because lobbyists and big corporate interest is coming before the interest of people. So the call is on very clearly on the government when it is looking at this reform of the petroleum resource rent tax, which we know is coming. Why are you ignoring the recommendation from Treasury, which actually collects a more significant amount of revenue compared to the one the lobbyists have been pushing for and the gas companies have been pushing for? It's going to be a real test for the Albanese government. On whose side do you stand? Do you stand on really securing generational equity, revenue for future generations, or do you stand on the side of the gas lobbyists? So whilst this bill is a step in the right direction to limit profit shifting, much more needs to be done to rein in multinational tax avoidance. I commend the intention and the direction of this bill to turn the tide on multinational tax avoidance. However, it is just the tip of the iceberg. We need to get real in this place. And as this government, the Prime Minister Albanese, wants to be seen as coming with a new leaf and doing things differently, let's call a spade a spade. If you genuinely want to reform, you need to do more than just the tip of the iceberg. So I will be looking with interest at the proposal the government brings forward when it comes to the petroleum resource rent tax. Are they going to be on the side of generational equity, ensuring gas companies pay their fair share of royalties, or are they going to be on the side of the gas lobbyists and the gas companies? The Treasurer, the Prime Minister, everyone in this government will have important questions to answer to the Australian people.